Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I would like to do a quick video today just to kind of go over some of the semiconductor companies out there. There is an ETF that I've done a analysis on quite some time, and this ETF is not Sharia compliant, but it has loads of different companies. I think about 90% of the companies in there are Sharia compliant. So what I want to do is basically update that video and just make sure that we look at these companies again to see if they're actually current buy, if it's hold or whatever it is. According to Zoya, I think it's about 90-something% of that ETF is actually Sharia compliant. So I'm going to give you the full details, but before I do that, if you haven't liked the video already, please do so, because it doesn't cost you a thing and it actually really helps the channel. Second thing is you can join us in the Patreon account where you get access to a lot of things, including the Discord, the Sharia compliant investing ebook and so on. You got daily watch lists and so on. You got the UK and US versions. You got the ETF trackers. You've got the dividends, basically calendars and so on. So you've got a lot of things going on, inshallah, and that really helps the channel. So that would be amazing if you could join us. So the ETF that I want to talk about today is SMH. We talked about this before. A year to date is actually retaining about 60%. So I want to see if some of the companies in there are right now undervalued or so on. So I've got 10 companies in there that are not just undervalued or whatever, they are. I just want to go over the entire 10 companies, the details of it, and then of course some of them will be overvalued, some of them, considering the 60% up, I'm sure some of them are definitely overvalued. There's about $11 billion basically under asset when it comes to this ETF, and it has a quite basically low expense ratio. But remember, this is not a halal ETF, okay? So although 90% of the companies that are in there are Sharia compliant, they don't pay attention to that basic Sharia compliance side of things. So you have to be careful to not invest in this company thinking, this ETF thinking that it's going to be Sharia compliant. Right, let's do this. As usual, we have the same headings, so I'm gonna try to be as quick as I can and go over the details. So the first company that we're looking at, basically top 10 halal stocks in that ETF, okay? Nvidia is one of those companies that's up so much this year, 244% up since beginning of the year. It has a wide economic moat. It has a 1.22 trillion market cap right now, and a lot of it is because of the AI situation. Price right now is almost $500. It has a dividend yield of 0.03, so they don't really care about that dividend. The payout ratio is 3%. Latest increase is 0. The 5-year growth rate is about 2%. They don't care basically whether they increase that dividend and so on, so they're not actually increasing it. Annual payout, you get about 16 cents for every share of this company that you own. Safety is almost 90%, profit margin 31%, return on equity of 40%, return on invested capital of almost 28%, and free cash flow right now about $10 billion. Total return in the last 10 years, this company would have given you about 61%, including dividend and price appreciation if you own that for the last 10 years. And then next year, it would basically, they're expecting the earnings to grow about 60%, and then almost 80% every year after that. And a lot of this is because of the AI situation. Fairly valued right now, according to Morningstar, $480 per share is where the price should be. Right now, it's about $492 per share. So again, this is probably one of the most overvalued stocks right now. 400, basically 44 forward PE of 44. Let's call it 45. So again, great company. I like the company. I like what it stands for. I like the things that they're doing with the AI and everything else, but it seems very expensive right now. The next one is Tower Semiconductor, 474 billion market cap. This is the company that produce. So these companies, the Nvidia and so on, they're designers. This is the company that makes it, okay? 474 billion market cap. It has wide economic moat, $99 per share right now. Dividend yield 1.8 right now, and payout ratio of 34%. Latest increase was 17%. The 5-year growth rate was 7%. Dividend streak 1 year. Annual payout is $2.19. Safety 62%. Profit margin 42%. Return on equity 30%. Return on invested capital about 22%. Free cash flow right now about $9 billion. Total return in the last 10 years, you would have received about 20%. Sorry. Next year, they're expecting the earnings to grow about 17%. Then 3% after that. 28% discounted right now. $139 per share is where they think the price should be. And the year to date, as you can see, it's up about 34%, and it has a forward PE of 19 right now. The next company we're looking at today is Broadcom, another company that I own in my portfolio. 404 billion market cap. It has wide economic moat, $977 per share right now. Dividend yield, this is ridiculous. The fact that it's actually this much. I remember when it was half that, even less than that. Dividend yield 1.88, payout ratio 44%. Latest increase was 12%. The 5-year growth rate is 29%. Dividend streak of 12 years in a row. You got $18.40 for every stock of this company that you own, or every share. Safety is 67% right now. Profit margin 40%. Return on equity 64%. Return on invested capital of 23%. $17 billion of free cash flow right now. 37% total return in the last 10 years, which is absolutely huge. Again, this does not tell us what the company is going to do going forward, but it gives us at least an idea where it has been. So next year, they're expecting the earnings to grow about 9%, then 11%, which is solid to double digits, right? 20% premium right now, $815 per share is where the price should be. And a year to date is up 76% and has a forward PE of 23. So it's still a little bit cheap in comparison for moving forward. And it's a strong buy from Quant, and basically from Wall Street is actually a buy, which is interesting. So normally Quant is actually, which is the rating that they use in Seeking Alpha. It doesn't have normally strong buy, but this is actually strong buy, which is very interesting. So 76%, almost 77% up right now, which is absolutely huge. Next one is ASML, another company that I own, 271 billion market cap. So it has a wide economic moat, $686 per share right now. Dividend yield just below 1%. The payout ratio 22%. Latest increase was about 6%. 5-year growth rate of 33%. Dividend streak of 13 years in a row. Annually you will get $6.11. Safety is 82%. Profit margin 28%. Return on equity almost 80%. Return on invested capital 46%. Free cash flow right now of $6 billion. Total return, we're looking at US dollars, that is. Total return in the last 10 years, it is 23%. Next year, they're expecting the earnings to grow 2%. After that, 24% every single year. It's discounted right now by 9%. $750 per share is where the prices are right now. It should be, and right now is $686 per share. And according to Seeking Alpha, a year to date is about 25% up right now since the beginning of the year. About 33 PE right now moving forward, and basically it looks like it's a buy from Seeking Alpha analyst, as well as Wall Street. Quant is actually saying it's a hold right now. Right, going back here, the next company we need to look at today is AMD. AMD is right now has a market cap of $194 billion. It has a narrow economic moat, $120 per share. It doesn't pay any dividends at all, but profit margin is 0.94, 0.36 total return, basically return on invested capital, and basically return on equity. Both of them non-existent right now. Free cash flow of just below $2 billion. Total return in the last 10 years 42%. Next year they're expecting the earnings to grow about 40%, then about 10% after that. Fairly value right now $125 per share is where the price should be according to Morningstar. So AMD is one of the designers as well, so they design it and then send it to Taiwan Semiconductor to make it for them. Right now up basically year to date 88%. Okay, and forward PE of 45, so definitely not cheap at all. The next company we're looking at is another one that I own in my portfolio, Qualcomm, 143 billion market cap. It has narrow economic moat, 130 almost dollars per share right now. Dividend yield of 2.51. Payout ratio 37%. Latest increase was almost 7%. The 5-year growth rate of 5%. 20 years of increase in that dividend. Annual payout, we get $3.20 for every share that we own. 80% safety, profit margin 20%, return on equity 37%, return on invested capital almost 20%, free cash flow almost $10 billion right now. Total return in the last 10 years about 8%. Next year they're expecting the earnings to grow about 12%, then about 6% after that. It wasn't not long ago this was a negative numbers, so things have changed slightly since the last 2 quarters. That's why you shouldn't pay too much attention to what's happening in the market, especially when analysts talk about, oh, this is down, this is up. Okay, sometimes these things can easily change. If the company is investing in certain things and selling their product and the revenue is going up and so on, the EPSs can easily change. Morningstar is saying it's fairly valued at the moment. $140 per share is where the price should be. So despite this actually is up about 20%, but I think a lot of that came from, let me just check for the month, 1 month. So 1 month is almost up 19%. Okay, a lot of that came from just in the last few, basically month or so. So 20% up for the year, 14 PE right now. That's probably the cheapest that we've seen so far based on PE ratio. Right, the next one that we're looking at is Applied Material, 130 billion market cap. It has a wide economic moat, almost to $50 per share, dividend yield of 0.84, payout ratio 14%, 23%, latest increase 5-year growth rate of 21%, and then the 5-year, basically they've increased that dividend for 5 years. They'll give you $1.28 for every share that you own, 86% right now. Safety wise, 26% profit margin, 48% return on equity, return on invested capital about 31%. Free cash flow right now is $7.5 billion. Total return in the last 10 years, 24%. Next year, they're expecting the earnings to grow by 15%, 12% after that for every year for the following 5 years. Fairly valued right now, $152 per share is where they think the price should be going forward. Another company that's up a lot, 53%, and right now has a forward PE of 19. And as you can see, it's a buy from Silicon Alpha analyst as well as Wall Street right now. Right, the next one, we're almost there. The next one is Texas Instrument, the company that we've talked about quite a few times in here. 138 billion market cap, wide economic moat, $154 per share right now. 3.23, I think that's the highest that we've seen so far. Dividend yield right now, which is quite nice. Payout ratio is 64, slightly too high. I would like it to be below 60, but that's okay. Latest increase almost to 5%, 5-year growth rate 17%, 19 years of increase in that dividend. Payout ratio, and the annual payout is $5.20. Safety 90%, which is fine. Almost to 40% profit margin, 45% return on equity, 25% return on invested capital, $1.6 billion of free cash flow right now. It would have given you about 16% total return in the last 10 years. And next year, they're expecting the earnings to decline about 6% and then 10% every year after that. Fairly valued at the moment. $155 per share is where the price should be according to Morningstar. And this is one of the companies that is still down for the year. So a year to date basically is down about 5%. For the last 5-6 months is down about 6%. For 1 month is about 1%. And it has a forward PE of 21. So it's one of the companies that is actually down in this list. Majority of them, as you've seen, almost up quite a lot, but this one is down. Next one is Lam Research Corporation, 92 billion market cap. It has wide economic moat. Right now the price of one stock $700 per share, dividend yield 1.11, payout ratio 24%, latest increase was 16%, the 5-year growth rate of 22%, and then 9 years of increase in that dividend. You get $8 for every share of this company that you own, 66% in terms of safety, profit margin 25%, 51% of return on capital, and return on invested capital about 30%. Free cash flow right now $4.5 billion, which is quite nice. Total return in the last 10 years, you will have made about 30% every single year of that last 10 years. And next year they're expecting the earnings to grow about 25% and then 8% after that for every single year. Fairly valued at the moment, $660 per share is where the price should be according to Morningstar. Again, another company that's up a lot, almost to 70% for year to date, 22% for the last 6 months, and 1 month is almost 11% up. Current PE is, forward PE is about 20, let's call it about 25. And actually Wall Street is the only people that are saying it's actually a buy right now. Now, moving on to the final company, and that is KLA Corporation, 74 billion market cap. It has wide economic moat, $544 per share right now, 1% dividend yield, 22% payout ratio, and the latest increase was 12%. The 5-year growth rate of 16%, 13 years of increase in that dividend, $5.80 for every single share of that company that you own, 71% safety, 31% profit margin, 122% return on equity, and return on invested capital about 35%. Now, free cash flow, $3.2 billion. Total return in the last 10 years, we're looking at about 25%. Next year, they're expecting the earnings to grow about 13%, then 6% year after that. Fairly value right now, $510 per share is where the price should be. I think I sold this company too early. I used to own it. I really like the business model. I really like the company, but I think I sold it too early. I think I sold it when it was like 400 something, or I can't remember exactly, but I sold it a long time ago. Right, let's have a look at. And as you can see here, another one that's up 44% right now, has a forward PE of 23, and for the 6 months is up about 30%, for 1 month about 13%. It looks like Seeking Alpha analyst as well as Wall Street is saying it's actually a buy. So there you have it. That's the 10 companies I wanted to share with you guys today. Again, some of these companies are great companies. The business models are very cyclical, meaning when the economy is doing well, these companies tend to do well. If everyone is buying brand new cars, new technologies, all the chips that go into these devices are made by some of these companies. Some of these companies design it. Some of these companies actually make it. So some of these companies have the equipment that are used. Okay, so you're gonna have to basically do your research. Again, although they're in the semiconductor, they actually all do different things. That's why. But for me, the mistake I made was, and it's not a huge mistake, Broadcom and Qualcomm are kind of similar position basically. Okay, so I'm not going to do anything with them right now. I actually like both businesses, but in the long run, I might actually add one of the other basically testing equipment kind of companies, inshallah. But again, I really like basically this whole ETF. But let me show you some of the holdings. I think the top 10 holdings, as we've already seen, Nvidia, Taiwan Semis, and so on. There's a lot more. There's about, I think, 20 something different companies. Okay, Intel is one of those companies. I think Intel is not Sharia compliant right now. It's gone down quite a lot because of that. Applied Material, talked about. Lam Research, Texas Instruments. Analog Devices, what we haven't talked about. Micron Technology, we haven't talked about as well. And then NXP. There's a few more other companies that we haven't spoken about, but majority of these companies are actually Sharia compliant. There's not that many companies in this ETF, but like I said, you have to be really careful because the ETF itself is not Sharia compliant. For that reason, you have to be careful. Now, for transparency reasons, I'm going to talk about, I do own ASML in this portfolio. I do own Broadcom. I do own Qualcomm there. And I do own Nvidia in the family portfolio, which I actually don't share. Basically, I haven't even talked about that, to be honest with you, and today's the first time. So yeah, those are the companies that I own, just to be transparent. Okay, actually a lot of my portfolio, Broadcom is my actually biggest holding. If you can see there, ASML is almost there, Qualcomm is there. So all three of them actually are doing quite a bit of money in there, alhamdulillah. So anyway, I want to stop the video here. I've got a lot more videos coming up. If you're enjoying this type of content, please like the video, subscribe to the channel. Let me know if you have any questions. Assalamu Alaikum, take care.